Hello, everybody. Hope you're doing well. So I'm back with another video after 2 weeks. I know it's been a long time, but I'm back to talk about some updates to Strike Finance. And first, what Strike Finance is, for those who don't know, and some comparisons to the market leader, Hyperliquid. So let's get into it. So this is Strike Finance. Now, just for information, this is the first sponsored video that I'm doing for Strike Finance. So, this helps me a lot as a creator to continue creating high quality content. So thank you for watching, and let's get into it. So Strike Finance, what is it? Strike Finance, for those who don't know, is a perpetual futures trading platform, right? And to give you a better, higher level overview on what perpetual futures are, here's a nice little grid for you. I searched for it in Grok for your convenience, but you can do the same. Perpetual futures falls under futures, right? Under the general umbrella of futures. And futures fall under the general umbrella of derivatives contracts. Now, derivatives are a financial product whose value is derived from the underlying asset. It could be a stock or it could be crypto like Bitcoin and ADA, as you'll see pretty soon here. So let's get into now the second part of the video. Some updates that have been made on the platform since we last spoke. Now that you have a higher level overview on what it is and what perpetual futures are. So let's get into it. There are a couple of very important changes that Strike Finance made, especially to protect the liquidity pool. It's worth me showing you what happened at the time I was talking about this. LP providers were $500,000 in the hole, and that's because ADA went up, massively. I think it was a price rise from like 50 cents to like 75 cents, I believe. So that's insane. This happens because the liquidity providers are the ones that pay out the profits for positions that are in the green. So if there's like $3 million in long positions open and they're all in profit, then the liquidity providers are responsible for paying that, and it comes out of the pool. So that's so the changes that I'll be covering next are to protect the profitability of liquidity providers. The first such change is 85%. What do I mean by that? If you look at the top here, you'll see two numbers, long interest and short interest. Now the total of this is whatever, it's like over 3 million or something. If long interest represents 85% or more of the total open interest, this number plus this number, then you can't open a long position. You can open a short position though, but you can't open a long. And if it was a reverse, if shorts represented over 85% of the total open interest, then you wouldn't be able to open a short, but you could open a long. We're not there yet. We'll see. Like a lot of people are really bullish on ADA, so I doubt that's ever going to happen. But either way, then this is to protect liquidity providers. Now, the next change I wanted to point your attention to is this number right here. If this number is 95%, it means you also can't open a long, but you could open a short. This is like essentially if 95% of the pool or more is being used, then you can't open any position. You can also look at the total amount in the liquidity pool right here on this page, in the liquidity page right here. Right now it's 86%. And the annual yield is in the negative at the moment. We'll get into that later. But yeah, so those are the two changes that they made to protect the profitability of liquidity providers. Now, if you want to be a liquidity provider, then that's something you're certainly welcome to do. Knowing the risks, of course. That's one change that they did make. So before, the minimum deposit was 10K. It's pretty high. They have since decreased the minimum deposit to 5K. So if you have a spare 5K laying around, you can definitely take advantage of this. So do note that at some point you will see like a negative yield, which is normal. That just means that there's a lot of open positions that are being paid out for their profits, right? So that's going to happen from time to time. But the idea is that over the long term, liquidity providers win. So this is like, the house always house always wins, type stuff. So that's how this works. The very last thing that I wanted to cover, I think it's critically important for any exchange to have really, is limit orders. As crazy as it is to think, Strike Finance did not have limit orders, but now they do, or at least in the beginning they didn't have limit orders, but now they do. You just click here if you want. You can open a shorts, 100 ADA, pick your leverage, and you could put the price. When ADA hits $1, open a short at whatever leverage you want, and or you could do it for longs as well. So that's one very welcome change that they made recently. So that's good. Good on them. So those are pretty much all the updates that they've made since I last talked about Strike Finance. Now, one last thing, it's not a change, but it is something that they've been teasing for a bit, is SNEC perpetuals. Now, Strike Finance has been talking a lot about adding more assets, including Cardano native assets, including RAT, BTC, and other crypto ecosystem assets. The first one, however, is going to be SNEC. And this is, well, at least that's my speculation anyway, and that's what everyone is speculating here in the comments. But yeah, so if that's the next update, then what I'm going to do is I'm going to take all of my SNEC bag and I'm just going to go here to the liquidity page and I'm going to add it right here if I meet the minimum. If I don't, then whatever, I'm a brokey. But yeah, so that's the very last thing in the updates section for Strike Finance. If you found that useful, if you feel like I missed any updates, let me know in the comments below. But we're going to get into the third part of this video, and I personally find this part the most exciting part, and that's the comparison to Hyperliquid, right? So let's get into that. What is Hyperliquid? Hyperliquid, this is Hyperliquid. Hyperliquid is its own high-performance L1. It's its own high-performance blockchain, and you can trade both spot and perpetual futures on this blockchain. It's really cheap to use. There's no gas fees, there's no transaction fees, nothing except of course for funding rates and trading fees, which we'll get into. But it's really fast and really cheap to use. So the major difference is that this exchange, this Hyperliquid exchange, is built on its own really fast, really high performance blockchain. In contrast to Strike Finance, it's an app built on Cardano, which isn't nearly as fast. It's also a lot more decentralized, so it's a lot different than the high-performance Hyperliquid blockchain. We can get into the technicals later in another video if you want. Let me know if you'd like to hear about that in the comment section. But the first sort of notable difference between Hyperliquid and Strike Finance is the fees. It's really cheap to trade here. I mean, if you just look at this, the fee right here, the maker or opening fee is 0.045%, in contrast with Strike Finance, which is, give me a second here, it's like 0.35 or something like that. Open fee, yeah. So it's about, yeah, well, it varies. In this case, it's going to be 0.85%, so that's pretty high. In contrast to, Hyperliquid, which is a lot lower. In this case, it's not dynamic though, but on Strike Finance, it is a dynamic. So that's something to know. You can pay as low as 0.075% if the market conditions are right. Now, the next fee I wanted to talk about is the funding rate. The funding rate for Hyperliquid is like really low, 0.0038% at the moment per hour, which is pretty cool. And the funding rate on Strike Finance, which they call the hourly borrow fee, is 0.05%, and that's also dynamic. So yeah, there's a massive difference there. Like a really massive difference. It's as you can see, it's really cheap. The next thing that I want to talk about is the speed, and I actually want to show you how fast it is. I actually have an open position here, so we can have some fun to demo this. Watch how fast this is. I'm gonna enter how much I want to add to this position. Is the 10x, right? Yep, that's 10x. Place order. Let's see how fast it is. There we go. It's that fast. Now let's demo Strike Finance. There we go. we're actually going to open a short because you can only open shorts, and that's the major difference here. You can do like a 1x, or let's just do like a 3x. Waiting, and there you go. I created a short. 380 short. Yeah, so that's sort of a live demo and how fast Hyperliquid is versus Strike Finance. It's just like it's a night and day difference. It's crazy. So that's the major sort of, those are the differences, or at least the two most notable differences between Strike Finance and Hyperliquid. There's a ton more differences that I'll go through in another video, and sort of I'll walk you through how Hyperliquid works versus how Strike Finance works, and some of the mechanics behind the blockchain on Hyperliquid, because I've been doing a little bit of reading, and it's actually incredibly interesting. But I think this is a good place to close out the video. I do want to say that one thing I think Strike Finance would benefit from is if they use an L2, kind of like Midgard. This is Midgard. It says here it's an optimistic rollup of layer 2, dedicated to scaling Cardano. So if Strike Finance were to use or to leverage Midgard protocol once it's done, then I think they could sort of match the user experience and speed on Hyperliquid, and at least be able to compete on that level, right? I wouldn't expect Strike Finance to take all of the market share of Hyperliquid, because that's not realistic, right? But it is more realistic that Strike Finance could take a small percentage, maybe 1%, 0.5%, who knows? Realistic expectations is what I'm going for. Besides that, the major difference between Strike Finance and Hyperliquid is that Hyperliquid is faster and cheaper, and Strike Finance is not. It's also still in beta, so there's a lot of things that they have to add, and there's a lot of things that the team is working on for the future. So we will give them that grace. But like overall, they've done a really good job at creating something really useful and something for Cardano to be excited about again. So if you've watched this long, thank you for watching. If you have any questions, just ask me in the comments, and let me know what you would like me to cover next, and I'll see you in the next video.